Poor economic reports from China and Germany, along with the ongoing U.S. China trade war, have rattled global markets. But is it a sign of an impending global recession? Hello, I'm Anand Naidu, and this is The Heat. Five large economies are now at risk of a recession, and analysts say the United States could follow. Germany, the United Kingdom, Italy, Brazil and Mexico are all facing a recession. The global economic slowdown is attributed in part to the ongoing U.S. China trade war. The United States has already placed 25% tariffs on $250 billion worth of Chinese products and plans to impose 10% tariffs on the remaining $300 billion in goods by mid-December. There's also the uncertainty over Brexit and the impact of a no deal for the European Union, as well as political turmoil across Latin America. For more on the global financial outlook, let's bring in our panel. Joining us now from Beijing is Chen Chenchen. She's the Deputy Director of the Department of Macroeconomics at Renmin University. Here in the studio is Monica de Bolle. She is a Senior Fellow with the Peterson Institute for International Economics. From Istanbul, Saruhan Hatipoglu is the CEO of Business Environment Risk Intelligence and CGTN's Global Economics Analyst. And Brai Odion-Esene is the founder of SW4 Insights, a public policy advisory firm right here in Washington, D.C. Thank you to all of you for being with us. Saruhan, let's start with you. As we just reported, five big international economies now at risk of falling into recession, and it could also hit the United States. What's causing this instability?
Well, there are various reasons, Anand, but as you mentioned, the trade war definitely with China is a factor, and we're seeing with the data that's coming out, and as early as this morning, the manufacturing data is a clear sign that actually manufacturers which have benefited from President Trump's policies are beginning to feel the impact of the tariffs. And now we're talking about the possibility of a 10% on $3 billion worth of goods, which actually would be directly hitting the U.S. consumer. So if you take the businesses and then bring the consumers into that, maybe not a recession in the next 3 to 6 months, but certainly a significant slowdown is in the making.
Chen Chen, we've heard all those figures about the tariffs being imposed on imports coming into the United States, U.S. imports going into China as well. If this trade war continues, how damaging could it be to global markets?
Well, I think if you look at the statistics, actually, you already see, especially industries of the immediate goods are being seriously affected. Countries like Australia, South Korea, that are deeply involved in the supply chain network between China and the United States, they are especially influenced. So if you ask me the specific industries, I would say electronics, machinery, chemical products, they are already witnessing some damaging effects. So I don't think that's the result that any party wants to see.
Brai, let's bring it here to the studio. There's lots of talk in Washington these days about the United States economy. There's lots of talk about the economy falling at risk into recession. Here's what President Trump had to say about that earlier this week. Let's watch this.
I don't think we're having a recession. We're doing tremendously well. Our consumers are rich. I gave a tremendous tax cut, and they're loaded up with money. They're buying. I saw the Walmart numbers. They were through the roof just 2 days ago. That's better than any poll. That's better than any economist. And most economists actually say, Phil, that we're not going to have a recession.
So the president there repeating that, saying we're not going to have a recession, but there was a survey conducted by the National Association for Business Economics, and they believe that the U.S. will tip into recession by 2021. What is your assessment?
So I don't think it's definite that we will have a recession. I think it is all reliant on will current conditions continue in terms of the ongoing trade war. If that escalates, where you get, the extra 10% on $3 billion going in, and then China retaliates, that could then see the U.S. tip into recession. But I don't think it's a guaranteed thing. And he's not wrong that the U.S. consumer right now is in a good place, only because most of the impacts of the tariffs are being felt by businesses, by manufacturers. But then, as you noticed, with the delay of the tariffs from September 1st to December 15th, is the administration recognizing that risk and not wanting to put too much stress on the consumer, especially heading into the holiday period, hence the delay. So I think for now, we're okay, but things will get worse before they get better.
But Brai, the fact that U.S. consumers have to pay more for their products right now, it's quite a considerable sum, about $1,000 per family per year. Will that hurt or help the economy?
Well, I think it was telling if you looked at inflation data that came out last week for consumer price index, it showed that for computer equipment, tablets, smart home assistants and the like, the price went up from June to July by 2.8%, which is the highest monthly increase on record. So this is even before you have the extra tariff increase going into effect. So definitely, I think adding more price increase onto the consumer is not what you want right now. Household spending, for the most part, is what's fueling U.S. GDP growth at the moment. You don't want to derail that.
Monica, several Latin American countries also in danger of heading into recession, among them Brazil, Argentina, Mexico. The Brazilian president, Jair Bolsonaro, wants to jumpstart the economy by reforming the pension system, controlling debt, and attracting investment. What is the situation there?
Well, the situation there is quite complicated because when you look at, a lot of people had thought that once some of the reforms went into effect, once the pension reform was underway and things like that, investment would come back. So there was a sense that the problems in Brazil were more cyclical than structural. And as it turns out, this is not really what we're seeing because the pension reform is advancing in Congress. It will likely be passed within the next 2 months or so, probably sooner than that. And everybody expects that to happen, but investment hasn't really returned. So that suggests that the problems are not cyclical, they're structural. And there are things like, you know, a slowdown in productivity that has been a problem in Brazil for a very long time. Weak, very, very weak labor markets at the moment. Unemployment is very, very high, and there are no real measures to reduce it. The consumer is feeling very uncertain about prospects into the future. All of that adds to a scenario where growth isn't likely to come back anytime soon. And in fact, you know, there's weakness being generated in the economy as uncertainty settles in.
What are the factors that discourage investment in Brazil?
Well, this overall sense of uncertainty is certainly one of them. So, you know, the sense that we don't know exactly what growth is going to be 2 to 3 years down the road. In addition to that, politics. So, you know, Brazil has just elected a new president. That was last year. He's been in office for a few months now, but there's still a lot of political turmoil in the country. The country's polarized, it's divided, and that creates, you know, a sense of just not really having some ground to stand on, and that hurts investment.
All right, let me go back to Saruhan. Saruhan, earlier this week, President Trump was talking about payroll tax cuts, other kinds of tax cuts as well. But of course, in typical Trumpian fashion, he reversed himself on Thursday morning, saying that, well, that's off the table for now. So it seems like the White House is a little bit confused about what it wants to do. But clearly, there is, I guess, a hope. There is an intention on the part of the White House to look at options to strengthen the economy. What do you think? What kind of options do they have open to them?
Well, actually, they don't have that many options on the table, and because if you look at, and your previous guest mentioned that U.S. consumer right now is quite strong, but again, that strength is largely dependent on what happens with the situation in China. Now, cutting taxes is okay. It always spurs consumption for the short-term period, but if you look at the federal debt and the federal deficit, we're going to hit that 1 trillion target 2 years before, which is going to complicate things, especially as far as the Congress is concerned. Passing tax cuts is not going to be an easy route for the president and the White House overall. They're also talking about capital gains, reduction in capital gains taxes as well, something which the Democratic Party is vehemently against because their argument is it supports the wealthy. And therefore, I don't expect these tax cut options to strengthen, to consolidate, and take form in the near term.
Saruhan, do you think the United States, especially when it comes to the trade war with China, is in something of a holding pattern right now until the election takes place next year?
Well, I think both countries are. President Trump is certainly taking things a little slowly, but he does need some kind of a victory on it. That's the important thing to underline here. China doesn't have that problem. I think Chinese are going to be waiting until next year and see where the elections will take the direction of their discussions. However, President Trump does need at least a bit of a victory, because if he really pushes what we've talked about, the 10% on the $300 billion worth of goods, we are talking about the last pillar of the economic strength, the consumer, beginning to feel the pressure. So any kind of agreement, and I still stand firm on this, that in the short term there could be a numbers-only trade agreement, not looking into divisive issues between the two countries. So if he gets that trade numbers deal, then the base is actually going to say, the farmers are going to say, the manufacturers are going to say, okay, we are making progress.
Chen Chenchen, what is your view on that? Do you think there will be a deal before the election next year, or will China just sit it out and wait, hopefully, for, in China's view, for another president?
Well, I don't think if Trump gets re-elected, or if another person becomes a new president, that will bring a fundamental change in current status of bilateral relationship. The ongoing trade war is simply a quite superficial symptom of the bilateral relationship. And this relationship will only get more competitive, actually, because it's a competition between an emerging power and an existing power. So I think not just the Chinese government, but the public on a general level, they are actually prepared for a prolonged trade friction.
Right. You know, Chen Chenchen, President Trump was recently asked about the impact of the trade war, and he said the longer the trade war goes on, the weaker China will become and the United States would get stronger. In fact, he says the United States is taking in billions and billions of dollars, while at the same time China is losing millions of jobs. What do you make of his view, his assessment on that?
Well, that's certainly his personal view, but from the Chinese public psychology, actually, you see that last year probably many people even thought it's probably just the Trump thing, his personal thing. But now more and more people are realize that this is going to be a prolonged trade war.
Yeah.
So now you see a quite interesting mood going on. I'm not calling it extreme nationalist, but I would say that people are showing strong support for private companies, like excellent examples in their eyes, Huawei, which is a leading technological company. So if you look at the statistics, actually the cell phone market share of Huawei in China has now grown by 10% compared with the same period last year. So I would say that the domestic support for endogenous technological innovation is rising.
Yeah, yet, Chen Chenchen, we also look at China's economic numbers. Its economy grew by only 4.8% in July, and that's the lowest monthly rate for about 17 years, since 2002.
Yeah, among the economists, actually, we are also having quite fierce debates about the fundamental reasons behind. Some economists simply believe it's a natural result of the rotations of business circles. Others believe it's because of the adjustment of different industries. For example, if you give more portion to the tertiary industry, there could be fluctuations in productivity for a temporary period.
Yeah.
But my view is that these explanations actually does not match with the turning points in the economic curve of the performance of Chinese economy. The fundamental reason is still that we do not have adequate independent technological innovation, because previously we rely pretty much on technological transfer from developed economies.
Right.
So now it's really time that you show more input of R&D in the national GDP.
Brai, lots of talk all over the world about the risks to the global economy. In fact, there was a German financial banker, Oliver Roth, who's been talking about Trump's trade policies, economic policy, and its global impact. This is what he had to say. Let's watch this.
Entire books could be written about Donald Trump's trade policy and its effect on the world economy. The bottom line is that, for decades, there was a cycle among industrial powers how goods are being produced, sold, and consumed. Donald Trump, with his policy, clearly interrupted this cycle, and the effect is a possible recession. That's no surprise, but even with an imminent agreement between Americans and the Chinese, it can't be changed quickly.
That sounds very ominous, actually. How much has Trump hurt the global supply chain?
Well, I think what you have a situation is not just companies who previously had lots of operations in China now looking for where else to set up shop and avoid increased tariffs, but then the knock-on effect on their suppliers and subcontractors and etc. I think what you're seeing now is everyone's having to reassess how they do business going forward, because even once Trump is gone, you can't assume that this America First mindset might necessarily go away with him. It might be something that's here to stay, not just within the Republican circles, but if you think about it, there are some Democrats who are also very pro-America First, and that might be something that they have to be aware of. And not only that, if you are a company who says, you know what, I'm going to move my factory from China to Vietnam, Malaysia, Indonesia, there is no guarantee that the same level of workforce skills, of amenities will be available to you. So that will set you back a ways as well. And so there's a lot of things
and in many instances, these countries have already reached their full capacity, haven't they?
Yeah, exactly. And so it's not simply a matter of finding somewhere else to set up shop. Is the workforce there? Are the facilities there? Is there infrastructure there to actually help me produce my good and still ship and meet my demand?
So it's getting back to what could happen after the election, and Chen Chenchen in Beijing mentioned that as well. So these trade tensions, you believe, will continue even if there's a Democratic president?
Well, I'll give you an example. Chuck Schumer, the Senate minority leader who leads the Democrats in the Senate. For the longest time, even like when Obama was president, when George Bush Jr. was president, he was calling for China to be labeled a currency manipulator. Right? So that's not a uniquely Republican talking point. This is a senior Democratic lawmaker who believes China, in his mind, has been cheating on currency, shortchanging U.S. manufacturers. Something should be done. And
you can even add to that Elizabeth Warren's economic patriotism plan, which is all about trade protectionism and, in a sense, America First.
And I can't see Bernie Sanders either being any different. So I don't think there's a uniquely Trump factor.
I absolutely agree with that too.
Go ahead.
Just 1 second on the issue. It is going to be pretty much the same old story. A former State Department employee said not too long ago, it's open season on China and everybody's got a hunting license. Whether it's Democratic presidency or Republican presidency, this problem will be here to stay for a while.
Right, Monica, let's get to Argentina, also facing a number of problems. The Treasury Minister has resigned. The currency has been in free fall. That's the peso. And one of the opposition leaders says that Argentina may not be able to pay its loan back to the IMF. What's going on there?
So Argentina is in its typical cycle of mess. It goes through every few years. It goes through these financial busts. So it's going through one now, in the midst of political turmoil because there are elections in October, this October. And it's interesting because we've been talking here about, the trade war, U.S. China, and the implications on the rest of the world. And when we talk about Latin America, the domestic problems, when we talk about Brazil, when we talk about Argentina, the domestic problems seem to kind of override all of these other problems, which of course add to their fragilities, but are not the main story. So in Argentina, the main story now is you have Mauricio Macri, the current president, who likely won't be reelected. And this is because we've just recently had in Argentina their primary elections. They're not like primary elections in the U.S. They're basically like mock elections. So they give you a taste and they give you a sense of how candidates are doing. And the opposition candidate, whose vice president is Cristina Kirchner, former president of Argentina, is well ahead of Macri, was well ahead of Macri in these first results, and continues to be. Now the polls are picking up this information, so the polls are showing that he's increasing his margin. So possibly we will not see Macri get reelected. That opens up a whole set of questions about what happens to Argentina if Alberto Fernandez, the opposition candidate, gets elected alongside with Cristina Kirchner. What does it mean for Argentina's relations with the IMF? Argentina has a very large financing gap in 2020 that they need to fill. They would need further IMF support for that to be done. And so there are lots of questions about that and whether or not we're heading into a situation where Argentina is once again going to have to restructure its debt, or even in a worst case scenario, perhaps default.
And what happens if it defaults?
Well, then we're in that messy world again, right? It's not exactly 2001 one more time,
yeah.
But it's certainly going to be very painful for the Argentinian population.
Saruhan, let's look at Europe, Germany in particular. Germany's central bank has warned that there has been a serious drop in orders for things like cars, industrial equipment, among other things, and that is likely to consider, and the country, as we know, there have been warnings that it's on the brink of a recession. And the bank also blames Brexit and something that we've been talking about here, the U.S. China trade war. How do things like Brexit and the U.S. China trade war factor into Germany's problems?
Anand, isn't that interesting that every time an economy, a developed country economy, slows down, the fingers point to outside factors? But Germany has to look at its own economy and what it has done during the slowdowns of Europe in general. And when you look at this, their fiscal spending has been absent. You actually go to the government and engage in fiscal spending at a time when the economy slows down, especially goes into recession like we've seen in Italy, Portugal, Spain back in the day. And none of these times European Commission allowed these countries to exceed their 3% of GDP limits. So you already have a monetary system that you don't control. The only avenue that you have for growth is government spending. And Germans have been very, very strict about fiscal spending. Now, though, we're hearing that there are plans to do 50 billion euro in infrastructure spending. Tax cuts are on the table in Germany, as well as deregulation with Chancellor Merkel's energy industry especially. That process has put a lot of pressure on certain companies, especially chemical companies in Germany. So I think we're going to see some sort of a fiscal stimulus in Germany. Whether that's going to avert the recession or not, it's very early to say, but Germans have to take matters into their own hands and get to spending as soon as possible.
Chen Chenchen, in China, the People's Bank of China has changed the way in which commercial lenders set interest rates on loans, and they're doing that to lower the costs on borrowing. But will that be enough to boost the economy?
Well, I don't think that's enough. But the Chinese government also adopts various other measures to boost the confidence of investors and consumers. Actually, since the 2009 financial crisis, what China has been doing is to boost the infrastructure projects to promote investment. And in the past few months, you actually see not just along the Belt and Road, but also in domestic market, actually, it is now encouraging the investment in fixed assets, especially energy and transportation infrastructure. So that is part of the measure. Another part is in consumer confidence. So I think it is now combining this AI technology together with the healthcare and also the education. I think that is also helping stimulate the solid demand from the domestic consumers.
Brai, President Trump says he's in no big hurry to get a trade deal with China. Can he afford that kind of talk?
Well, I think he's in pure politics mode at this point,
yeah.
And his base is watching, and he promises his base he'd be tough on China, so he can't be seen to be, yielding any ground. And that's where I think all this talk about payroll tax comes from, because as you see with all the data and all the commentary by economists, the issue is not consumer spending. The issue is in manufacturing, the issue is in fixed investments by businesses. A payroll tax does not address any of that. What does it do? It curries favor with the populace. Mm-hmm. And so I think that's what, as he's running through the options, and what can I do to appease the people past November 2020, get reelected, and then I go back to doing what I do best. And so I think, in hindsight, I think someone said it earlier, we're going to see a numbers agreement where China agrees to buy more of something, the US maybe dials back a notch a little bit on some tariffs, and then both sides go back to their corners, and if he gets reelected, then they resume negotiations afterwards. I can't see a meaningful agreement on structural reforms happening between now and November 2020.
Right. Monica, another big trade partner of the United States, Mexico. Mexico's economy posted zero growth. Mm-hmm. In the second quarter, it was weighed down by a slump in industrial production as well as declining investment. Now, the IMF has lowered growth forecasts, which were initially 1.6% to 0.9%. What does the future hold for Mexico?
So Mexico is also in a tough spot. And I'd say that there are three factors mainly affecting Mexico. The trade war is affecting Mexico. So because Mexico, unlike Argentina and Brazil, which are very closed economies and don't really participate in global supply chains, Mexico does. So if the trade war is affecting U.S. manufacturing, it's going to affect Mexican manufacturing. And we're already seeing that happen. So that's certainly part of the story. Another part of the story, I think, is the overall degree of uncertainty that currently exists in Mexico because of these fears over what is actually going to happen to NAFTA. So we still have NAFTA in place, but USMCA, which is the successor to NAFTA, hasn't been ratified. We don't really know when that's going to happen. The closest we get to the elections here in the U.S., the less likely it is that it's going to be ratified anytime soon. And that has been a factor that's been weighing down investment in Mexico for quite a while now. So this has been ongoing. And then the third factor is domestic and is political, and it's, you know, fears over Andrés Manuel López Obrador and his policies and his way of dealing with markets and with the economy. So he has shown himself to be an interventionist. He is showing his nationalist colors, and all the things that have happened with the oil company Pemex, you know, which is one of the most, or is the most highly indebted oil company in the world. He wants Pemex to build refineries. He wants to make Mexico self-sufficient in fuel, and that would involve a lot of spending by Pemex, which Pemex simply can't afford. So that has created a lot of uncertainty in markets and on the part of investors as to how interventionist Andrés Manuel López Obrador is likely to be, and how much more of this will he do.
And if I can add one thing, using the USMCA as a case study point for the U.S. China trade negotiations, you've seen how long it's taken to get this deal ratified. Right. So imagine how much longer it would take to ratify a U.S. China trade deal, given all the different voices who want to be heard and issues about enforcement, etc. So it might not be...
And intellectual property
exactly.
and
so
all of the...
This should be a case study for how difficult it will be to get a U.S. China trade deal through Congress.
All right, Saruhan, we've just got about a minute left, and I have to talk about this, and it's the big animal in the room. It's Brexit. The British Prime Minister, Boris Johnson, is currently holding talks with the German Chancellor, Angela Merkel, as well as the French President, Emmanuel Macron. That's all coming ahead of the G7 summit. How would a no-deal Brexit impact the world economy?
Well, in the short term, Anand, it's going to be a very bad impact. But I'm not going to say tremendously significant, because after the government change took place in the UK, businesses, consumers, both in the UK and Europe, began to kind of familiarize with themselves with the idea that actually no-deal Brexit could take place. Having said that, we're going to have an immediate impact on GDP, which already is suffering in the UK, but also in the Eurozone, European economies overall. But will it come to that? I think that's the question that we need to ask ourselves. Will it come to that? I am even thinking that there could be elections in the UK before the Brexit deadline, so that the new Prime Minister could have a more or stronger mandate, if you will, when he gets to the negotiating table. But overall, if there's a no-deal Brexit, expect immediate impact on the financial markets, GDPs in Europe. But in the medium term, these two groups are going to come together and find a solution out of this sooner or later. So medium to long term, I would say not too bad of an outcome.
Okay, and we are going to have to leave it there. Thanks to all of you for being with us. That's all we have time for, but the conversation continues online. Chat with us about this or any other show on Twitter. We're at CGTN America, or visit us on Facebook. That's facebook.com/CGTN America. I'm Anand Naidu in Washington, D.C. Thanks for being with us.